Hello, I'm Gwen Preston of Resource Maven, and I'm here at the Metals Investor Forum in Vancouver in November. And I'm joined by Chris Gordon of Integra Resources. Now, you probably are familiar with Integra Gold, very successful story with the Lamaque project in Quebec, generated a $600 million takeout in May. So that was a success for me, a success for my subscribers, and for obviously lots of investors. Now you're getting the team back together after not very long, and launching anew with an interesting asset in Idaho. So why don't you lay out the basics of what's going on at DeLamar?
Sure, thanks, Gwen. After the success we had with Integra, the original story, Integra Gold, we were, made aware of this project called the DeLamar Project in Southwest Idaho. Has a lot of similarities to what we had available to us at Integra the first time around with Sigma Lamaque, in that there's a nice history of past production there, successful mining in the past. There's still an opportunity for a lot of sort of untested targets, both sort of lower grade, bulk tonnage, near surface targets, as well as high grade material that's sort of deeper. So that acquisition is just completing right now with Kinross, where we're getting ready to put the drill bit to work there. And I'm not sure if you want me just to launch into the whole story.
Well, why don't I? So there's there's lots of aspects here to talk about. Yeah. The history of DeLamar has two parts. In the late 1800s, early 1900s, high grade underground production, like really high grade, ounce per ton, yes. 2 ounce per ton, gold underground. Then in the 70s, 80s, and 90s, lower grade open pit. And so one of the things that I like about the asset is that both of those opportunities still seem to be present.
Yeah, exactly. And that's kind of the angle for shareholders, I think. Whereas you mentioned the last time they were running, there was a 3,000 ton per day mill there, and their main focus was on feeding a big mill like that, And again, as you mentioned, in the late 1800s and early 1900s, there was very high-grade material, around 30 gram per ton and higher, that they were going after, which we kind of suspect is probably what's feeding the more close to surface, lower-grade mineralization that's there. So the idea is to sort of attack on both fronts from there and try to aggressively, much the same as we did with the first Integra, we aggressively market, go to the capital markets as well, and get the drill turning. So there should be 20,000 meters completed next year. But before we even get to that level right now, we're looking at a situation where, depending on the cutoff that you use, we either have 2.6 million ounce gold equivalent coming out of the gates, and that's using a 0.3 gram per ton cutoff, or at a 0.75 per ton cutoff, we're looking at 1.4 million ounces. So for us, the idea here is to kind of aggressively drill this, get a resource update in towards the end of next year, and then ideally be in a PEA level within about 12 to 18 months from now.
So aggressive timeline. I wouldn't expect anything different from your team. This is how you operated at Integra Gold. You're clearly playing from the same book. The resource is really important. So an asset of this nature, so you're talking about one that has a reasonably large defined resource. It's in a brownfield situation, so permitting likely to be not too difficult. So just the stage of asset, a lot of these assets are valued in the market on an enterprise value per ounce in the ground. And so right now, Integra, having only just started trading less than a week ago, is really pretty low on that ounce in the ground valuation curve relative to peers in the industry.
Yeah, I would agree with that, and I think that's where it's attractive for shareholders looking at this. I guess one of the biggest challenges we had with Integra Gold was the fact that we were operating in one of the worst bear markets for the golds in a long time, which meant we raised a lot of capital between 20 and 35 cents, which obviously affected the share structure. So this time around, we're currently sitting with about 18 million after the raise we just completed to spend on the project. With the tight share structure, having 55 million shares issued and outstanding right now. So I think where the stock's trading at about $1.05 right now, we're still really cheap when you look at the enterprise value per ounce sort of thing and the amount of gold that we have, as you mentioned. So we do have another 43-101 expected in Q1, and that's on Florida Mountain. That's the asset that's right next door. It's about 4 or 5 kilometers away from DeLamar, with the same sort of past production history on both the high grade as well as the more close to surface, lower grade materials. So I think for investors right out of the gate, they'll be looking at a company with, depending on the cutoff you want to look at, we'll have somewhere between 3 and 4.5 million ounces without even having put a drill into the ground.
Right. So already inexpensive based on the DeLamar ounce in the ground count, more inexpensive once you incorporate that Florida Mountain resource that's not out there yet. Need transactions to close and whatnot before that can happen. So that, just on sort of basic valuations, very attractive. Also, you say you raised $18 million, and that was pretty darn easy. I mean, it may have been annoying for those trying to hunt down subscription forms, but it speaks to the fact that you just are fresh off of a big success. And you were, I mean, the list of subscribers to this placement, kind of a who's who in the industry, likely to sort of hold on to their shares in expectations that this is going to be something real. So, you know, I think you benefit not just from a tight share structure, but from a good share registry.
Yeah, I would agree. And just to be clear, we actually did raise $27 million, but $18 million is what we'll have approximately to work with after the sort of payments and a few other things for the DeLamar asset. But yeah, we were able to get out there and bring in, you know, some of the who's who in the business as shareholders. And I think one of the things that's kind of interesting is a lot of the larger funds and institutions out of the States and Europe and even in Toronto were not able to participate due to the fact that we kind of fell under the cutoff for them, which is usually around $100 million market cap before they can invest. So I think a lot of those groups are potentially sort of, you know, waiting and watching to see us develop and sort of get to that threshold where they can start to get involved as well. So yeah, we do have
Right, so that creates some good confidence that as this thing, provided it develops in the way that you're expecting, that there's going to be capital available going forward and ways to fuel the momentum.
Yeah, exactly. And it's kind of interesting when you look at sort of the opportunity, the comparisons back to Integra Gold, where we had access to a lot of mining history, a lot of mining data, and things like that. And obviously, the area was very mining friendly. So there's a lot of similarities here, where we have a power grid to the project, we have water treatment facility in place already, and we have some shops and some offices and things like that that are there. So it's not like we're, you know, starting from scratch here. We're kind of coming out of the gate with a tight share structure, cash in the bank, and ready to aggressively move this towards PEA level to start with. As you said, pending the drill results sort of working in our favor. So
absolutely. So fresh out the gate, hasn't even been trading a week. Haven't really gotten to work yet. So lots of news flow coming. That's the new Integra Resources.